Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube? Thanks, Marty. How we doing in YouTube? Can I get a check on YouTube? Okay, great. Thanks, everybody. Well, good morning. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This is December 19th, 2024, post FOMC shocker with over 1,000-point drop in the Dow. Quite an event, quite an impact, and we're going to talk about that today. And so you guys understand, the Trader Lab is a group of like-minded traders who come together to leverage their collective experience. I have shared 60 PDFs of structured trades that you guys can download if you would like. See what I'm going to be sharing here every day in the stream. And also there's a library of webinars that you can access. And there is a link in the bottom of YouTube. And there is no cost to become and visit the Trader Lab community. It is a group of like-minded traders who've come together, and it's all levels of experience to leverage that experience into something better. In addition, grab a pen and a piece of paper. I'm going to give you some statistics, and like everything, you have to vet everything you hear, no matter what the source, and make sure it's right for you. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure trading futures, equities, and digital currencies involves substantial risk of loss and it's not suitable for our investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into it, we'll talk. The other thing is I am streaming from Costa Rica. I've been having power fluctuations this morning. The internet goes up and down, and it's just whatever the monkeys decide to do, that's what happens. If I drop out, whether you're in the Bookmap Discord Trader Lab community in Discord or in YouTube, I will come back in. So please be patient. And let's go from there. Now, I'm going to give you an overview of the higher time frame, what happened yesterday, what the picture looks like, and what we might anticipate today. But before we do that, I have something I want to share with you that one of our participants in the Trader Lab created just for you for the holidays. Let's see if we can play it.
Especially today. That move in the years after the FOMC announcement, true test of your skill. It's moments like these where your dedication to bookmap, order flow analysis, and statistical probabilities truly shine. I've seen you set charts, analyze probabilities, and execute trades with precision. You're not simply chasing profits, you're building a robust trading system founded on sound principles. Rigorous backtesting, a true testament to the power of community share. And speaking of shared knowledge, a special shout out to Tom B. I hear he's been sharing his incredible wisdom with the board. With over 4 decades of experience, both on the CME board, trading code setup, it's truly wonderful. He's dedicated his time to nurture the next generation of traders. Having that kind of real-world experience ready to is an invaluable asset. This Christmas, I wish you all sharper, when your statistical advantages grow and strong, leading to consistent and sustainable profits. Unwavering discipline. May you remain disciplined in your trading plan, resisting the temptation of deviating from your stop learning and evolving as a trader, always seeking to refine your strategies and improve your risk. Remember, trading is a marathon, not a sprint. Celebrate your wins, learn from your losses, and never lose sight of your long-term goals. And remember to appreciate the wisdom of those who walk the path before you, like Tom. Happy holidays and happy trading. Santa, I hear tell that Bookmap has some exciting new features coming. Keep an eye on those releases. They might just give you an even bigger edge in the new year. Of course, I know it wasn't all easy. We've had our share of challenges, made mistakes, and hit a few bumps along the way, but that's okay. Through it all, you stayed strong, creative, and resilient. From all of us, Merry Christmas and Happy New Year. Thank you for being part of this journey. Here's to an even brighter future.
Well, thank you, Slaughterosity, for that. It was quite enjoyable, and thanks to all of you who participate in the Trader Lab community. Hope you enjoyed that. Best of wishes for the holidays, and now let's get back to business. If you're in YouTube, I hope you enjoyed that. If you're visiting Trader Lab for the first time, please give a like, and let's continue going. Now, I promised you we'll take a look at the higher time frame. Let's do that. We have a lot to cover, but sometimes you just got to take a little break. Let's see if I can get this over here. Maybe, maybe not. Okay, higher time frame. Now, this is a shot of yesterday. You can see we had what you call definitely the Acapulco cliff dive. Now, what these are micro composites. What a micro composite is are consolidations that we put a volume profile over, and it shows us locations of participant behavior. Now, the thing about this is the auction is based on the participant behavior. However, when a new input comes into the market, like the FOMC announcement and the pressure, which completely changed the outlook on interest rate reductions for next year, this disrupts the auction, and then the participants have to start a new auction. In other words, the auction is what's too high, what's too low, and there's a chance that we're either going to test yesterday's low of day, maybe, or have an inside day and begin the process of trying to balance out. And continue and maybe have an inside day. Now, statistically, we have a high probability of taking out yesterday's low or at least testing it. But that doesn't mean it will. It just means it might. And I hope this makes sense to you guys. Now, grab your pen and paper. I'm going to give you some statistics. And how we doing there in YouTube? By the way, if you're just coming into YouTube and you missed the beginning, please be sure to watch this stream. I'm going to make it public, assuming I don't have technical difficulties here from Costa Rica, and we'll go from there. So let's think about how we opened. We are opening, let me just check something here, higher inside of yesterday's range, I hope. Let me just check something here. This is going to be our RTH open. Let me just check a few things. I'm pretty sure that's the case. And here's settlement. So higher inside of yesterday's range. So grab your pen and paper. And of course, like everything, you have to vet these statistics for yourself. And past performance not necessarily indicative of future results. There is approximately a 97% probability we'll take out either the first hour's high or low. There is a 93% probability we'll take out either the ETH high or low. There is an 82% probability we'll take out the overnight volume point of control. There is a 81% probability we'll check either the previous high or low. Now, based on what we know about yesterday, what do you think the odds are of getting back to yesterday's high versus checking yesterday's low? Think about that one. 72% probability of testing the ETH mid. 69% probability of checking yesterday's settlement. So there you go. Okay. And there's some other levels in the higher time frame, but I'm not going to spend time with them today. Now, one of the things I stressed very heavily this morning in the Trader Lab was to not trade yesterday's emotional state. Many traders have not experienced what we had yesterday, 1,000-point drops and all that kind of thing, and the Dow are not what happen every day. You need to have either experience, or if you don't have experience, recognize when the condition of the market is not in alignment with your plan. Part of that has to do with volatility, rotations, depth of the book. If you're going to attempt to trade in a market like yesterday or even today, you need to have a plan that reflects the current condition of the market. It isn't about overlaying your plan on the market. It is about you responding to the market's condition and either adjusting your plan to it or not trading when it doesn't fit your plan. I hope that makes sense. Now, the other part of this is, what is the context? And context is number one in the hierarchy of inputs. I might suggest that potentially after some short covering and potential short squeezing on the open, that we might get continuation selling. Well, let's think about this logically. If the market has rejected what's above it and we did the cliff dive, then we can get a couple of things. We open higher, we get short covering, and those who are still short, who think this is the end of the world, and I can't say it is or isn't, except valuation has changed, maybe they're going to use the opportunity to sell counter rotations. Would you? So think about that. Now, there are many traders who are going to come in here and just trade it like another day. They're going to see long trades. They're going to see short trades, and they're going to try to trade both sides. What I have to ask you, and this is why context is so important, is where's the dominant side and potentially the better opportunity? Are the rotations going to be higher to the downside, where there's more opportunity for similar risk, or are you going to be taking counter trend trades? Now, it's not my choice what you do. It's your choice to identify where your edge lies for the risk you take. And the other part of it is, when you see the average range expanding, like it has in this condition, have you adjusted either your sizing or your risk? So that's number one. So before you put your toe in the proverbial trading water, you want to make sure that you can have everything lined up and prepared for the current environment. And again, if it doesn't fit your plan, you need to have the discipline not to trade or to wait until volatility and speed of the market slows down. And that's just part of trade plan. It's not that you shouldn't trade. It's that you should know when to trade and when it fits and when it doesn't. If you don't have those answers, now you're sitting with the gamblers. And I'm going to suggest that might not be such a good plan. And it's not a recommendation, which it might sound like. It's call it a reality check to the business you're attempting to sustain a career or develop a career in. So now, knowing the statistics, knowing the condition, knowing the context, and knowing that we're always in an environment of maybe, not prediction, let's take a look at the trades. Now, I'm going to be sharing structured trades with you. A structured trade is something you can learn in the Trader Lab. Whether or not they qualify is something you have to determine and vet. You're going to see market mechanics, but they do not, and I have to stress this, they do not stand alone in a vacuum. The fact you see a trade, if you don't have it vetted and the risk management aligned with the volatility, then you're just potentially throwing dollars out the window. And I did start at the top of the stream to say to you, yesterday's volatility, which can be eye-popping and jaw-dropping, emotionally, if you tried to trade it and got run over, which would happen if you have no experience and you're just gambling, or you sat out, which is the right thing to do if you don't have a plan for it, remember. Now you're going to walk in today feeling FOMO, like I missed out yesterday. I could have made so much. Is that you? Because that voice in your head, which is FOMO, and I call that hide, Jekyll and Hyde, Hyde's the lunatic that resides in all of us. That voice in your head is going to cause you to make choices that are potentially not in your best interest. And you need to always know how susceptible you are, and also what yesterday's range and volatility will do to you. And as part of your plan, you need to know it's going to be active, and you're going to have to be on guard for that and not respond. If you don't have that in your plan, time to put it in. Please give a like if you're into YouTube. Stan is saying he cannot hear the video in YouTube. Do I have audio in YouTube? Okay, thanks, Stephen. All right, let's go. So this is the RTH Open. And remember, I am in Costa Rica. If I drop out because of technical issues, yes, last night the power was out for 2 hours. I don't know, but it was very interesting. This morning it's been fluctuating. Internet comes and goes. It just depends. So let's do the best we can. Remember, if I drop out, I will come back. So, ETH high. I'm in Central Time Zone. This is the RTH Open. So we have a high probability of checking the ETH high, and we have other stats below us. Let's kind of see what we get now. So RTH, what are we anticipating? Well, the possibility is to check we have a high probability of checking the ETH high or low, right? We know the trend might be down, and we know if we open higher that we might get either a squeeze to get some of the shorts out, and then the primary objective, subject to your plan, is to sell rallies. Again, why? Because anybody who's still long potentially is going to be looking to get short. So let's take a look. Now remember, this is not a place to trade, in my opinion. I posted that substantially this morning in the Trader Lab, and of course everybody follows their own path and everything else. It's not up to me. So here we have RTH Open. Now this is the ETH, and we're coming into RTH Open. Now I cannot trade this. I will not trade it. I don't even think about it. It doesn't mean I can't. It means I've been around long enough to know that I let somebody else, let the gamblers have their time. There's all day to trade. So let's look. So RTH Open. This is the developing volume point of control. The market comes down. Remember, the market opens higher. We're above settlement. We're above, where is it? Let me just look a little further here. Overnight volume point of control. This is the retail price from the ETH, and that's the ETH mid. And this is yesterday's highest volume. It's called the naked volume point of control. So all of this, and I believe that's a correct location. Things got a bit scrambled yesterday. Let me just look at that. 69.50. I think that's correct. So we're opening above these levels. That suggests up first. ETH high, high probability. Now let's try to look at this thing. Now remember, this stream's based on structured trades. The idea at Trader Lab is to help traders understand how the market works, why it does what it does, and how you might at times get in alignment with it. And then everybody takes stops. Everybody wants to hit themselves with a cast iron frying pan because we're in a random environment. And then you add into what happened today, and it actually creates more volatility, more randomness, and the structures tend not to have strength. And I suggest for many traders, and I may sound a little bit like I'm repetitive here, you don't need to trade today. You do need to be around for tomorrow. Or you just wait until things come in alignment and you start seeing that the structures are holding. So let's look at this. Now, I don't have a trade here. I'm just going to show it to you. This is a micro high volume structure. I've taken out the ETH high. I have no reference point here for a trade. I have no trade here. This is a sweep right here, and it's a selling sweep, which suggests a rotation higher. I have a buying sweep. It suggests a rotation lower. These are not mechanical. This is just part of order flow, and it's very important. But I cannot trade this, and I don't try. You see what I'm saying? So I can see the behavior. I have no trades here, not a zippo. So I don't have a trade. I'm seeing all of this. I'm going, what's going on? So I have to wait. And how long I'm in here? 3 minutes. What do we think might be going on? What do you think is happening right now? Remember, the market goes up to go down, and I think we'll agree we had down yesterday, and then it goes down to go up. And those who are still sitting long are going to use these behaviors to get short, to sell. So do you want to join the buyers or do you want to join the sellers? I'm getting in YouTube that traders cannot hear me. Is that correct? Could somebody please post in YouTube that if they're having an audio problem, that they restart, that they do a reset there, because I think then I'm gone. So right here, we have resting liquidity. Now let's look at this liquidity. We break through it. There's two possibilities. It becomes either resistance or support. I want to show you. Break through, support, break through. We don't test this one. Break through. We test this one. Break through. We test this one, but it's this one. Break above. Watch. Up here. Hit this one. Now, these are advanced processes. They're not shorts. Can you pick the high of the day? Me, not so much. What I find is let somebody else be the hero. They deserve the reward for picking the high of the day. Typically, what you have is what you see here. Buyers. Somebody bought this. Now, who? Don't know. Not my job. Selling iceberg, buy stops. The shorts are being squeezed. Okay, thanks, guys. Did the Christmas audio not play in YouTube? Just curious. So this is a structure. Again, I have no trades. So, and that's me. I'm not saying you. I'm saying me. Now, this is called VPOC migration. Since nobody knows where the high of the day is, and now if you do, I always invite you to come to YouTube. Okay, and can someone confirm that there was no audio in YouTube for the Christmas video? Okay, well, we're going to have to move on. So right here, this is called VPOC migration. There's two possibilities. When this migrates up, it is saying this is the retail price. And down here, I call this a variable high volume node. What the market is saying, and this is language, is that potentially what's down here is too low. So when the VPOC migrates, it is now the highest volume. And I have to check one other thing here before I move on, because I'm a little distracted here. Let me just check down here. Okay, VPOC migration. I need to label this, and then we'll continue. Can someone else confirm that there was no audio in YouTube for that video that I played? One more time. Okay, so too low, and we're migrating up. Sweep here. Now, when I see a sweep, buy sweep, And what's going on here? The icebergs are up here. And now I push off. So as far as I can tell, we're still going up over here. Remember what happened here? We broke above this. So this is a support area here. This suggests potentially lower. So let's watch. But I got my VPOC migration. So it pushes me higher. These are compound processes in TraderLab. And this is advanced. So, and this is not where you would start. But let's try to follow the yellow brick road. This here is our resistance. Okay. So remember what happened here. Break, pullback, test. Test. Let's try to see some symmetry. Sweep, looking for a reversal. VPOC migration potentially negates the reversal because we have the potential for reversal and we have potential for continuation. We hit this liquidity up here, resting liquidity. I break down. Now there's two possibilities. You're going to love this. It's either going to go up or down. I know. But, okay, Fred, there was no audio. Sorry about that, guys. If you want to hear this, it's an amazing audio video stream by Slaughter-Ozzy, one of our participants. Thanks, Slaughter-Ozzy, for creating that for TraderLab. If you want to hear it, come to TraderLab. It's really quite good. And there's no cost for TraderLab. When we come back here, so let's talk about what happens here. Market's going up, going up, going up. Now, you'll notice here we had the same behavior we came across. So this is suggesting right here, this is called mean reversion. Here's the possibilities. Come across, come back across. Come across, come back across, right? They're the same. But what is different? I have the sweep, that's different. And I collide with this liquidity up here. And when I hit this liquidity, the following can happen. I can break above it. It becomes support. I can break above it. It becomes support. I can break above it. It becomes support. I can break above it. It becomes support, but I don't break above it. It becomes resistance. I have my sweep. I have my obstacle. I have my break. And now the possibilities are the following. I can come up here, test this, or I can break under here and test this, and then return here. Let's see what it does. Here. So remember, now, would you short this? I would. Can you? Up to you. What's my plan for the day? Not saying it's a good one. I'm just saying it's just one way. For me, the primary trading for me today is shorts only. Why? Because I know, based on the way the market tends to work, is you're going to get squeezes. You're going to squeeze out the shorts. And you're going to potentially get buyers. And who are the buyers? Those who think it's a deal. Oh, it's on sale. This is the opportunity of the century. It's too low. Is that any of you? And the other part is, if we get the squeeze, do you want to be the buyer or do you want to join the sellers? Just a question. Me, considering the statistics favor testing yesterday's low, whether we will or not is not material. It's just statistical probabilities. Me, low. That's all I can tell you. And it never has to do that. So my first trade was here. And it's for all the reasons I indicated. Now, this is more advanced. If you're in TraderLab, you would not necessarily, be doing this. Now, right here, this is my support, and it aligns with the VWAP. The trend is down. Now, if you think the trend is up, that's okay. For me, context is lower. This is my scale, and then it's trade management, and we're off to the races. Let's just see what it does. Notice the volatility. Come back here. Now, this is my variable high volume node right here. I'm going to put a line here. What I do, at least what I share in TraderLab, and it's just about, well, that's a nice color. It's really just about structured trades, right? Now, there's a lot you can do when you get advanced. But in order to get advanced, you got to start somewhere. And even what I do in TraderLab is quite advanced, even at its most basic level. It's quite different than what you're going to find out in the mainstream, stuff that's out there. And of course, I'm not saying there isn't valuable, insights and things that you can acquire, but the TraderLab is really an advanced trading process that I believe anybody can learn if they put the time in. The thing you're never going to overcome is randomness. So the way you deal with randomness is only interacting where you have statistical edge. That's gaming. So what this is here, and I'm just going to show you the structured trades, right? So we have the short up there. We have a scale. Now, trade management, a different issue. I guess I'll touch on that a little bit. So how do we manage this? You remember what I was showing you with the resting liquidity. This is order flow. I come down into this. This now becomes support and resistance, right? I get a sweep going into this, and I anticipate a reversal here. So what I know is right here, if I reverse, I need to get below this. Now, I don't know, this could be over right here, okay? So the last place I rejected was here. Now, subject to your plan, you're either out here someplace and that's plan specific. Right here, I'm anticipating a counter rotation, and what I get is I can't get above this. So this is good for the short. And I'm coming down, microstructure, break low. This is order flow. Why did this go down here? Why did this go down here? Sellers, too high, break low. What's over here? Sellers. Now this is microstructure. This is more advanced. Sellers, resistance is there. Microstructure, break low. Resistance is here. Test, support, resistance. Bracketed. As far as I know, where's it going? No clue. By the way, what's this? Variable high volume node. Where'd that come from? Let's go back. Follow this. This is TraderLab. Not saying it's perfect. There is no such thing. This was what we rejected. That was too low. If I come down here again, what's my possibility? To check it again. In the TraderLab, in a structured trading process, this would be another target. And then, or you're just managing your trade, whatever you vetted. Nobody gets the high, low, unless you fall over it by accident. And even then, who knows, right? So this is the next target. This is TraderLab process. Is everybody tracking? Greg, did you hear the audio on YouTube when I played that back then, the Christmas thing, or are you referring just in general now? I think it was so well done. I enjoyed it tremendously. Okay, so we're coming down. We're coming down. This is the target. Now, it doesn't have to be your target. It's my target because I trade the auction. Are you guys with me? One moment, please, guys. I'm getting a... Okay, great, Dan. Thanks. If you guys couldn't hear that video, it was super. It's a little gift from the TraderLab and Slutterazzi, who's a TraderLab participant. If you guys didn't hear it in YouTube, we'll try to get a link for it so you can check it out tomorrow. It's really quite nice. Thanks, Dan. Appreciate that. Let me get back here. All right. Look at this behavior here. Huge sweep, and icebergs take the other side of the trade. Now, for me, there's two possibilities. Now, I tend in this environment to lighten the trade. In other words, cut down on size. So in other words, subject to account size, what you might do in an environment like this, if you trade minis, you go to micros. If you're using a 3-point stop, maybe you go to 6-point stops. In other words, you've got to balance it out from risk reward. If the rotations get larger, the risk is going up. So you need to make adjustments. And if you're just trading this like you did pre-yesterday, you're kind of missing the point. So for me, there's no longs. Anyway, it doesn't matter. And it doesn't mean I won't take a long. I'm saying in Trader Lab, I would suggest that maybe if you don't have an edge counter trend trading, you just hang out and you observe. So let's look where our next trades are. So this was my target. For me, let's just say it was my next target. Doesn't matter what I do. Sweep. Now, right here, I see the big sweep. Now, when I see a sweep, I'm thinking to myself, well, I have a VHVN here. I have mid and VWAP, and I know retail traders are going to keep their stops up in here. And I know this is my resistance, and I don't know what's going to happen. Oh, joy. So let's see what it does at a location. Do you see it? So right here is a short. Now this becomes very aggressive trading. Now let's come back here. What do we know about this VHVN? If it was a target coming down, right? And now I get this counter rotation, and now I come back to a location in the Trader Lab for a potential short. And these are all very aggressive trades. Now, this is not necessarily a trade anybody ought to be taking, but what do I know about this? I know that is my location. I got my buyers here at that high volume node. I know I have my sellers potentially here, and I know I have retail stops at mid and VWAP. When the stops come out, and now here's how I use, or one of the ways I use the stop and iceberg detector, and this is what I really like. Well, there's many aspects to it, but this is one that I can share with you here. There's other things I share in Trader Lab that I don't have time to share here, but here's a little insight. Why does the market go up? And I know the answer, right? Buyers. But what kind of buyers? This is the different way to think of things. Buyers are initiators and buy stops. If the market's going up, and I don't personally, I do not fade most of the time the mid and the VWAP. And the reason is typical retail trader behavior. You need to think like a retail trader, but not act like one. What do? They put their stops at the mid and the VWAP. What else they do? They mechanically sell the mid and the VWAP. And like everybody, even in the casinos, the gamblers get paid. So it works sometimes. Everything works sometimes. And even not doing anything but making it up works sometimes. But what I know, since I trade the auction, is that this price at the time was too high. And I know that this price down here, right there, in alignment with this compound, was too low. So if I take a short here, I'm looking for this. Let's just see what it does. So here's what would happen. I put the trade on here. I'd get risk neutral, and I'm looking for it to come back to here. Right here is the outside edge of this micro distribution. A distribution is nothing more than a consolidation. So when you look at this, let me just put a little box around this so you could kind of see what it looks like. Here, let me get this over here. So at the time, we can see what this looks like. Here, let's try to get this. Target. Break high. So it's this. I'm going to draw, and it's actually this right here. Too high, too low. I'm going to now put a little box around it. This is a consolidation, as you guys call it. Me too. Except in the world of the auction, it's really more what's called a distribution. So, because it's a distribution of volume is what creates this. So let's see what this looks like now. So this is the outside edge. So what happened here? Sellers were here and sellers are there. Buyers are under here. Okay, so seller, buyer, and that's your chop. Then I get this urgency here. They sweep the book, and then I get my short. Now, the thing is, this is my target, and that is my outside edge. So let's just see how this works. And I don't want to sell it here. I need a structure and a location. So this is the auction. Now, so where does it come? Let's put this line back in here. It doesn't get here. So here's what would happen. And this is how I work this trade, because I don't know. It's like everything. I have no clue. It's not my job. So this is a short for me. I get risk neutral, job number one, and then I'm going for here, and then I'm looking for it to potentially go lower, which it doesn't do, and I get taken out of the trade. Now, let's watch. Variable high volume node. Now let's try to look at the language. Now this is not easy day to trade. There is no such thing as easy in this business, but the volatility actually creates it. That's why it has more risk associated with it. And I always encourage Trader Lab participants, park. Now here we get VPOC migration. That is suggesting this is too high. So I'm looking here for potential short up here. So the market comes across the range, and now I get my chop. This is microstructure. Now, right here, I do not have a location. Right here. I have nothing to do. This is, if this was up here, I'd have a short. Because what I'm trying to do is trade where the highest volume was. Because if the market comes to an area of high volume, that volume is like a wall. And why is high volume important? Because it's where the market auctioned and it left it. So if I now have high volume here, it is saying potentially this is too high. We're not paying that. Think shopping. Now the retail price is here. So if I come across here, I'm looking for it to come out and then come back. That's called mean reversion. The mean part of mean reversion is we don't know where the outside edge is. Now I'm going to put a little line on here, but it's not anything I can do anything with. Because look at this. How do you trade? How do you get short something like this? Yeah, I can't. So I don't. I just go, okay, that's not my trade. So let's look some more. Notice where we come. Now we get here. Isn't this joyous? Why didn't it do it from here? Because that's trading and that's randomness. Now we come under here. So this is very high volatility. Let's just watch. See the behavior coming back down to the variable high volume node right here. So this is advanced, so I'm not going to encourage anybody to even think about it, but I am going to encourage you to try to think about what it says. This is language. Now I have no location here. I have no location here, but what do I have? You ask. Here's what I have. I have too high, and I have this, which is now too high. I have a distribution here that I rejected. This is a fractal of what this is. So as I go down in time frame, think Russian dolls. I don't use the clock. It's really based on something called fractals. How Matryoshka dolls are inside each other? Well, the higher developing time frame, this is too high. When I go down in time frame, this is too high. I had my sweep here, which is setting up a reversal for me. And I have this location. No bueno. Sellers. Okay, if I come back, where's my location? There, and what else? Since I broke under support, resistance, right? Break above it becomes support. Break below here, resistance. Come up not to there, but to here, only in hindsight, there's the high volume, break away from it. Now, this is resistance. That is resistance. And I'm under this distribution. Where's my resistance? It's here, I'll show you. And again, guys, this is Advanced Trader Lab. You're not going to learn this in 6 months. You can learn it if you come to Trader Lab. And today, no matter what process you use today, this is a higher risk environment due to volatility and rotations. Just, it is what it is. So now I know this is too high. There is my sweep. That's too high. Now this is too high. There's my sellers. They're in control. I come back. Where's my next short? It's there, 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 or here. I come across. I come across the range. What's at the other side of the range? VWAP in mid. What else is here? I think I was going to show you stop divergence. I forgot all about it. I'll come back to it. You'll see it. Microstructure, location. Now, how do you get into this trade? This is why the volatility is an issue. Right here, I have location. I take the stops out at the mid and the VWAP. I have, here's stop divergence. Delta, 24 buy stops. Delta, notice where I'm at. Location, location. Think real estate. What happened here? 26 buy stops, 2 buy stops. Stop divergence is what I call this. Sellers take control. I come back here. 24 buy stops. That's the delta. The green bubble doesn't mean get long. It means aggressors. Who are the aggressors? The buyers and the buy stops that become market orders. That's delta. What happens here? 24. What happened over there? 26. 2. Stop divergence. What's happening here? 24. Test the level. 16. Oh my goodness. Don't know yet. I'm taking it out of order flow. Buyers are here. Going to the moon, Alice. Sellers are now below the buyer. Sellers are below the buyer. Sellers are below the buyer. The buyers. Sellers are below the buyers. It's still a suspect. 5 buy stops, stop divergence. Buyers are here. I need buyers to go north. Why are we not going higher? It's because there's a passive side you cannot see. If you know what the limit order book is, that's the passive guys. What that means is they're not in a hurry. It's kind of like, yeah, I will only sell it to you if you pay my price. Otherwise, the heck with you. Okay. So who are the buyers here? Buy stops. Who's buying over here? Buy stops. Where's my aggressors above here? They're not there. Now, I don't know this until I break below this buyer, which is there. Now, how do you trade this thing? Let's look. Maybe you don't. Watch. So, what do we know here? This is why I'm talking about range and risk management. This is too high. Let's come back to how we observe structure. And again, one of the things I stress in the Trader Lab is plan, risk management, because this is not a video game. This is about sustaining a career. That's what Trader Lab is built on. How do you stay in this business? Well, if this doesn't fit, you don't have a trade here, or you're going to be getting short down here, and you're going to be running twice the risk that you typically do in Trader Lab. Trader Lab, it's usually under 3 points, or it could be less, of course, but most of the time we're under 3 points. What do you notice about the range and the volatility? Hasn't it kicked up more than twice? So would your risk be maybe more than twice? It doesn't have to be, but if you're running 3-point stops and all this, you're just throwing dollars out the window. Again, just an opinion, right? So how could you get into this? Well, you can wait for a retracement to come here. And if it doesn't come here, you're not in there. Or you're going to take it on the fly and you're taking outsized risk. So, and I post like crazy about this stuff in Trader Lab. Let's remember where resistance is, right? Here. Structurally, I'm not seeing good opportunities in here. So it's not about making it up, guys. By the way, here's a sweep. So you have your outside edge up here. We have a VHVN over here, which is too high. I have a sweep here. Let's come look back here a little bit. This is my resistance. I'm not getting to these levels. Now, over here, the chop is an auction break low. I'm not coming back. So I don't have trades. I have no trades. So I'm just telling you, I don't have trades. I have some trades. But if you're trying to trade this, you're going to probably hit your loss limit pretty quick. This becomes resistance. And if you break high and check it, this is an advanced process. It can be a long, but this is something that's only available in Trader Lab. This is advanced, okay? So this is not something I should even mention here in the stream. Now, mid VPOC migration. This is important right here. We can break low and test this, or we can break low and come back across the range and rip everybody. Let's see what it does. This is a structured trade in the Trader Lab. Again, you have to have an edge for this. So what do we know? This is the developing volume point of control. This is like for the whole day where the highest volume is. In the developing time frame, this was too low and it becomes too high. It then is resistance. So I have resistance here. I have the mid at the time, and I have retail. So if I come outside to here, this is a variable high volume node. It sets up resistance. I'm going to label it. Follow the process. I'm doing the same thing. If you notice, variable high volume node. And I'm going to put a little line here so we can see it. I don't always draw lines, of course, when I'm trading, because I just look here. So what I see is micro high volume structure. I see high volume here. I know this is too high. I know we got the mid over here, and I know that we're going to get mid sellers, and I have no clue what's going to happen. So let's forget that. I know this is my retail price. I know this is too high, and right here is ping pong. I get my buy sweep, which sets up a short. I have location, think real estate. I have an outside edge, and this is a potential short in the Trader Lab against this structure. I get my sweep here. So my sweep says down, my sweep says down. And again, look how fast it is. I'm not saying anybody should try to trade this. I'm just saying these are structured trades. Part of a trade plan is you have to be able to enter and stay within the framework of your risk parameters. So this is not a day that I would, I think, I've been trading going on 45 years. I've been through markets like this a number of times. I mean, serious volatility like this. And what I found for me was it either fits or I don't need to trade. I just am past the point of the adrenaline rush, the dopamine fix, and the fear, the FOMO and all that, I'm getting that question that you tagged the developing value area high. I can't say because I don't know what time that's at. Okay, right here is something called the IB. That's the first hour's high or low. So for me, I have no longs in this context. For me, counter 10 trades are trade management opportunities. You can trade both sides if you have an edge. I just don't do it. I found for me it's too much brain damage. I just want to be thinking from the dominant side. That's where I get my opportunity. I'm not going to be trying to flip-flop around, like a cat on a hot tin roof. So the probability of taking out either the first hour's high or low is about 97% probability. Now, we can take out one, we can take out both, we could do whatever, we can even take out none. In this context, though, I'm leaning south. And we have a structured trade in the Trader Lab called the IBF. The IBF is a counter trend trade, and this is what it is. It sets up here actually. Now, again, that's not my trade. I don't even think about it. For me, the IBF, when it comes back inside, sets up a potential mean reversion trade, which is a counter trade and to sweep and to come back to wherever the VPOC is. And at the time, it's here. So if I took a long, which I won't, I'm looking for this and potentially to come across the range. So let's see what it does. Notice what we do. So the IBF, this is a structured trade, and again, I'm talking about me. It's not a trade I take in this context. It's a trade I use for trade management to get out of my short, if I'm still short, which I wouldn't be, and look for a continuation to come back down here and test below. Also, there's a statistic to test settlement, which I don't remember if I gave you that, is about a 69% probability. I forget these things, but we didn't get it. So there's the low, there's the IBF, there's the retracement to mid and VWAP, and then it can continue higher or not. So now we get VPOC migration. So again, for me, right here, I'm above the IB. IB will be support. If I take a short here, I'm going to scale at IB and then hold it, or I'm going, and that's basically what I got. If I come back to IB and hold it, I can then take the stops out here and then squeeze. Either one is fine. It's just not my trades. I just don't care. Watch. I had a data hole in here. Power went out for a while. Just so you see a hole in the data, I think it was right there. Don't remember. Okay, and now we're back where the stream started, and I haven't seen any of this. So nothing for me here. I have no trades here. If you're looking for action, this is not the time or the place for me. For me, I just don't do this. I do take the trades when they have good alignment. Getting some data lag here. The developing value area, I'm getting a question about the developing value area high after the IBF. Well, we had more than one, but you might be I don't know which one you're referring to. The value area for me is not important. It's just a number. It's 70% of the volume for the day. Those are not that important to me. For me, the test of yesterday's low is a high probability. It's not a recommendation. It's all in the stats I give at the top of the stream. Let's look at this. This is called the IB continuation trade. This is a structured trade in Trader Lab right here. Let's look at this one. So this right here is key, and so is this. Two locations. Let's look at this. Coming down, we break below the IB. Now there's a structured trade in Trader Lab called the IB. Now for me, the trend is down, so I have no interest in longs. Just me, right? So here, the break. So this is a potential short if it's in your plan. This is a structured trade here break, and the test. So here's how this trade works. And again, you have to vet this. This is a structured trade. Remember, there's other trades that are more advanced you can learn in Trader Lab. This is, as we say, one of them, but I'm going to call it more fundamentally based, but this is on the track, if you will, to advanced trading methodology. You got to learn the other pieces to understand what's going on with this. It's many pieces that come together. Right here, we see the sellers, and these are buyers. These are icebergs, limit orders. Icebergs, limit orders. And you can see them down here absorbing these sell stops. Who's getting long? I don't know. Not my business. Resistance, resistance. Now, I come around, and my structured trade is here. So I know I have location. And here, there's the location. Now, you have to understand something. The market is not based on a line anywhere. What is this? It's time. Time. The first hour is what's called the initial balance. We came out below the initial balance, and now we came back inside the IBF. No long for me. Trade management. Then it's shorts. If I don't have a short trade, where is my trade? Well, depending on how long you've been in Trader Lab and how long you've been building your business and vetting, this is your next trade. Now, since there's no precision, we want is to look for a location. Now, I'm going to take you to microstructure. Let's just start following the little story that's taking place. Too high, break low. That's resistance. What happened here? I'm below the IB. Break low. Where's my resistance? Let's just follow it. And again, these aren't recommendations. You got to vet this. What's too low? Let's look at this. This is resistance. Now let's talk about this trade here. This is called the IB continuation trade. So, too high, and you can see it there. I'm not paying that. Matryoshka doll, out of here. Break. What about this? Too high, break. Too high. What about this one? Too high, break. Resistance. I go through it. Resistance. Resistance. What happens here? Where's my buyers? There's my buyer. Let's go. What happens? I break below. What happens now at my resistance? Resistance, resistance. Stop divergence, micro, buyers are here. I need my buyers to get above these passive sellers. Iceberg here, break. Trigger in the Trader Lab. Where's my resistance? There, there, and there. Short, stop here or stop there. This is your short. Now, and this is a structured trade. You could learn this. Now, I'm also going to suggest to you that this is not mechanical. It is something called contextual. You can learn this. So your short is here in this trade, and it's the IB continuation trade. So you can download, on the 60 PDFs I share, and there's no cost for this, as well as a library of webinars. There's a couple hundred of them you can actually access, but in the library, there's specifically topical webinars that you can reference, some of them up to 5 hours long of real-time narration. So you could see this, not in hindsight like this, but in real time. And, there's a bit of both. But the reason I do it this way is, what good does it do you unless you understand why? Once you understand why, you can then follow along the narration that I do in Trader Lab when I can. So this is too high. This is too high. So I got my short there, anywhere you like, there, and then the goal is to get risk neutral and then trade management. Where does this short fail? Well, it can fail there, and it can fail above here. Let's see. If you took this trade, you'd still be short, or, let me give you the or, and what was that statistic we had about settlement? You do remember, I know you write these things down. It was, and I think Slaughter-Ozzy mentioned this in Trader Lab, I think about a 69% probability. Is that like Slaughter-Ozzy? So this was our target. So if you're in TraderLab, this is a trade you take. You go from there to there. And the OR, let me give you the OR. The OR is, or it's a scale subject to the number of contracts, or you're following a vetted trade management process and you haven't done anything. You've gotten risk neutral. Maybe if you're running, let's say, a 3-lot, you got door number 2 covered, and now you're trailing and you're willing to give back the open trade equity to go for what? Yesterday's low. So now you switch, and you'd learn this in TraderLab too. It's almost like when you're trading multiples, and this is more advanced, in a way, they're not all exactly the same. If the third is what we call a runner, you have to give it the room to breathe. And based on the volatility and the rotations, you got to stay out of that noise based on that range or average ATR. So you would then, and the psychological part of that, that's very difficult for all of us, by the way, me too, is if you have 10 or 12 points or whatever you have, 20 points in something, and you give it back. So before you ever manage a trade that way, you have to know if that actually gives you an edge by doing that. The answer lies in the research and the edge. Does that make sense? How are we doing in YouTube? Please give a like if you're getting something from this. To look for the developing value area high as a target, you certainly can look at anything. To me, all levels are just maybe. I look for the participant behavior as it's reflected in the auction and the order flow. So when I see this at a location, and it could be anywhere, and it can even be out in midair, but I need alignment for me. I just don't care that much about trying to guess. I mean, we are gambling in many ways about the outcome of any specific location. So it becomes statistical probabilities of locations that give you more edge over random behaviors. So for me, lots of times what happens is I don't know what's going to happen anywhere. I mean, I absolutely don't at any moment. But once I have a structure, now I can interpret this. Now I can sell this. I can't figure anything out here. I can even sell this, if I understand what it says. And this requires proficiency and unconscious competence, so to be able to behave quickly. Most of us don't get that without a lot of practice. One of the things about this, and the reason I don't use indicators, is I can speak a foreign language. And indicators are fine. What they are translators of a foreign language of participant behavior. Well, what I found was that I had ambiguity, conflict, and, sure, the trend is down. Well, are you getting long? What are you doing? What are you doing in this environment? What about all those sharp moves up? Are those longs, or were they opportunities to cover? And what are you going to do about what happened yesterday? So anyway, where does this trade fail? This trade will be over up in here. Or, here's the or. And this is where your time frame comes in, or your fractal. This is too high. Test, break low. Where's the volume? Here, test, break low. Now, nobody knows, but this is a target, right? So here is your volume. Break high. This is now support. So now you're getting squeezed. So the possibility, again, is this is when you're done with that trade. Or if you have a runner, you're trailing further behind, and then you're going to get taken out. That's why I was asking the question. How do you feel about that? And that's the emotional state. So where's the stops? Up here. Let's see what happens. Right here. Let's watch. Right here. Not a trade recommendation. We're going to observe it. Buyers are here. Microstructure is here. This is another potential IB continuation trade. It gives you no time. This is a potential short in a trader lab. But here's what you'd have to do with this. You'd get in here. Your stop's got to be out here. Now let's look at where the support is, where you have to scale on this thing. Ahead of there. Let's see what it does. So there and out here. Top of this consolidation. So you've got this, this, and this. So if you got short up in here, you're really looking for just to get risk neutral, which will bring you down in this area, and then you want it to continue lower. That is a structured trade, but look at this. I barely had time to discuss it because this is so fast. Absorption above this seller was absorbed by the buyers, and this is where the trigger is right here. Ideally, you'd be coming back here. You don't get it. You got to jump into this thing and your stop's above here. Now let's see. So now we're going to watch, okay? Support. Now when I say support, it's not long. It's scale. And what's the trend? Down. What is our target? Maybe. Coming back to it. Okay, not a recommendation. So what I do in my plan is I'll keep trading shorts and covering on reversals. And I'm not recommending that. I'm just saying is shorts cover on reversals. Because why? What's the trend, guys? Anybody think the trend is up? Raise your hand. If the trend is down and the probability is to test yesterday's low, over 80% probability, which doesn't mean it's going to. We can have, remember, I posted in Trader Lab this morning, if you're in there, possibility of an inside day as the market kind of balances out, or we test yesterday's low. And it's not a huge probability. It's a 37% probability on its own, but to test yesterday's higher low is about an 82% probability. Past performance not indicative of future results. So I know we can have an inside day. And I have other levels in the higher time frame that I don't have time to go into, but I posted them this morning in Trader Lab, I believe, a chart with levels on it. You can all come to Trader Lab if you're interested in this. You know, the Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It's nobody can do all this on their own, and neither can I. It's the community where we share research, statistics, give each other encouragement, post charts, interact, etc. Daniel, the settlement of 40.25, and I know I have 49.25, I think. If you go to the CME site, they post the settlement. So you might want to check that. Just to be sure. So when it comes to settlement, you just really got to know where the real settlement is. So I go by the settlement at the CME. And my software plots yesterday's close. You know, the cash close is not settlement. So they're different things. Kind of confusing since they changed that. Yeah, you're welcome, Michael. Thanks. What do I got here? 49. Wait. 40. I can't read. Is that 40.25? I give up. Is it settlement or close? Settlement. Is that 40.25, Daniel? I can't see it. 40.25. Shame on me. Got it wrong. See? Trader Lab. Can't do it without you guys. Thank you. Thanks, Daniel. Appreciate it. So, we still got this stat open. and yesterday's low. Okay, so that's why for me it's shorts only. And I'm always going to say not a recommendation if you can take the counter side. But here's something you can always think about. Which side do you want to join? The sellers or the buyers? So for me, I only want to join the sellers. For me, the counter rotations are opportunities for continuation trades. That's just my thing. And this doesn't mean you can't trade both sides. But I have found over time that it's, quote, easier to focus and stay aligned with the trend in spite of the sharp counter trend rallies that you're going to get. So I just pick a side. And that's almost every day, unless I'm in a context of two-sided trading. Now, two-sided means balanced. Outside in mean reversion trading. For me, in this context, if I get mean reversion, I'm looking to sell the mean reversion. I'm not looking to get aligned for the counter trend reversions. Does that make sense? By the way, guys, reminder, if you haven't come to Trader Lab, I think you're missing out. There's no cost to be in this community. It is a advanced trading process. It's going to be different, and it probably would make you uncomfortable because you're going to learn things that are probably counter what you believe this business is. This is a gaming business. It is based on statistics, not prediction. And most of us, everybody that I know, including me, thought that the business was about creating more certainty, more predictability. And that's human nature, by the way, because we're looking to avoid risk. So how do you avoid risk? Well, logic says you get more certain, which creates more curve fitting, more indicators, more time frames. That's just normal. Okay, natural. You do it. I do it. Everybody did it. I did it, unfortunately, for many years. And then I morphed into trading systems to do it better. All that did was create more curves fitting, more optimization. And the word optimization really means curve fitting. And it was very sophisticated curve fitting, but it always had the same outcome. It would always break down over time. So when you guys look at rotations and go back and tune your indicator so, quote, you'll get it next time, you're really doing the same process. Maybe not as well as I did it because I did it with systems, but the outcome and the result was the same. Trader Lab is built on a different dynamic. It's based on what the business is. The business is gaming. Casinos are the business model. They do it really well, and they operate in the same environment we operate in, which is random. Everything's completely uncertain at every moment in a casino, except how they play the games. We are in the same environment. Now, the casinos don't try to predict the cards coming out of the deck, and I always have to say this, and they don't predict how the gamblers are going to play their cards. How can they? They can't. And if you think they could have figured it out and optimized everything and avoided paying the gamblers, they would have done it. Every business has cost of production and overhead. Ours does also. So if we take a model that's proven, which is gaming, and now we use that as a chassis to overlay our business on, so we're not trying to do something that is counter to what the actual business of trading is, maybe we'll have a better opportunity to actually create a career in a business. This is what Trader Lab is built on. It's built on my 45 years and other traders' experience. I'm not the only one. In fact, I'm not even the senior trader there. Our senior trader has over 50 years experience, and everybody in between. You don't have to be a super experienced trader. In fact, I have found that the less you know, the more beliefs you have that you've been trying to fix because they might be defective and not in alignment with the business, the less you have to change those beliefs. Just remember, ancient mariners thought the earth was flat, and if they sailed to the horizon, they'd fall off. I mean, they seriously thought that. Now, today we kind of go, really? But I'm going to say is, what's your beliefs, and are you acting as an ancient mariner, thinking you can predict something that nobody can predict? And the fallacy of all of this is that we all have winning trades if we closed our eyes and just flipped a coin. In fact, there is an exercise called the coin toss. Just if you haven't done that, it teaches you about randomness. There's a lot in Trader Lab you can learn. One of the most important elements of Trader Lab is to learn the business you're actually in, not what you imagine it to be. And a lot of the choices or beliefs we have are based on the need to be right and avoid risk. Our primal wiring dictates our behavior. We believe we can do something when maybe we're doing it based on reptilian brain to avoid the saber-toothed tiger. So because our need is not to lose, to feel pain, the ego to be right, the dopamine fix, we are oriented to make choices that may have nothing to do with this business, other than I know I want to be short only because I understand this business. If you don't understand this business, it might not be realistic to anticipate longevity. The failure rate for other retail traders who are really doing the same thing collectively is that they believe something that may not be appropriate for the actual business we're in. And I know I repeat this, and I apologize if you've heard this before, but I do have passion for the business. And based on what I went through, because when I started, there were no off-floor traders. All my buddies were floor traders. And there was no internet. You bought a book, or you went to a seminar which charged a horrendous amount of money. Watch the sweep here. Watch the behavior here. Watch the behavior here. Remember, we're going for the last short in Trader Lab. That's a structured trade was in this area. You'd still be hanging out. That's over a 10-point trade. You'd be risk neutral. Now we have to be managing the trade. Let's maybe look at that a little bit. Hey, if you have questions, post them, guys. Hope you're getting something out of this. Please give a thumb up in YouTube. There's a link down there in the bottom of YouTube. If you want to come to Trader Lab, there's no cost for that. You can then download 60 PDFs of these structured trades that I'm sharing with you. This is what this looks like, circles, arrows. I'm not a vendor. What this will do is give you some ideas, and you can reverse engineer what I'm showing here. These are actual trades, and some are just screenshots because other traders were asking me to, what are you doing? And I go, well, this is what I'm doing. And, whether or not it's appropriate for you, I can't say. Remember, there's our sweep. What are we looking for? Counter rotation. Now, if you understand that, what would you do about it? Just a question. What would you do about it? Trader Lab, you can learn what to do about it. And it's not about predicting. It's about understanding how you integrate a high-tier order flow tool like Bookmap with auction market theory using a volume profile as a chassis in the intraday developing time frame. Does your indicator tell you right here that we can anticipate that? Order flow does. If I'm in this trade and I understand what this says, I can now operate here and cover my trade. That doesn't mean you should. I can. Why? I understand the language of the market. I cannot predict anything, but I understand what's going on. Then before it happens, I know what I'm going to do. Do you know what you're going to do? Or are you just making it up on the fly? If you're making it up on the fly, just go to a casino, get the cocktails, and make sure they give you the ticket to the buffet. If you want to be in the business, you want to sit on the side of the table with the casinos, not with the gamblers. And yes, we always pay the gamblers. Every business has overhead and costs of production. Hope you're getting something out of this, guys. And I appreciate you visiting Trader Lab. I've got a couple of more minutes. Now's the time to post any questions you have. And remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. I am potentially going to make this one available It's up to you, of course, if you want to visit TraderLab, take advantage of all the resources that Bookmap offers. And by the way, there is no cost to come to TraderLab or the Bookmap Discord community. There's a lot of additional education available at no cost: stocks, options, crypto, order flow with a high-tier tool like Bookmap. Did you understand what happened there? You can learn this in TraderLab. You can also learn about algorithmic behavior. We've all heard about those evil algos. Well, what about it? What can you do about understanding algos? What about market maker behavior? And a lot more. Swing trading. By the way, this process I share in the TraderLab, it's generic. Doesn't matter what markets you trade. Of course, you have to vet it for yourself, but this is the basis, the fundamental reason the market does what it does. Every moment in the market is random, but some things are consistent. What is consistent is the purpose of the market. That is, in all fractals or time frames, as you think of them, to try to figure out what's too high, what's too low, what's just right. Right here, what's too low, what's too high, and right here, this micro structure right there in alignment. I'm just going to show you the level so you can see it. With the sweep and the order flow, this seller, the micro high volume structure, the sweep, before we had the reversal, I said, now we have to look for the reversal. If you understand order flow, you might do something about that. You might be out of this trade here or here, either one. Would that work for you? If you're interested, use the link in the bottom of YouTube. If you're getting education here that's different than what you get elsewhere, I'm seeing a poll in the TraderLab. Guys, come to TraderLab. There's a poll in there. You might want to come check this out. Use the link in the bottom of YouTube. If you want to visit TraderLab, there's no cost. You won't be solicited. Also, if you're just new here, there's a couple things, announcements. One is, if you are a subscriber to Bookmap, there is a special going on right now for 50% off the first month of the Stop and Iceberg package. It's called the MBO package, and it's got other bells and whistles in it. That's what lets me see what's going on here. Very nice to have. Everything in this business about creating edge. And I know none of us want to pay a dime for anything. I have a moth that jumps out of my wallet. It's like a guard dog. But if I can gain an edge with any tool, it just pays for itself. Again, that's up to you. The other thing is, there's a free digital version of Bookmap that you can download. It comes with data, and you can kind of stick your toe in the water with that. You can go to bookmap.com. And also there's deals at bookmap.com. I don't keep track of this. When I started with Bookmap, and I think it was in 2015-ish, somewhere in there, none of this was available. And so the fact you guys might be able to get a discount or get your toe in the water. And there's other subscription structures if you want to check it out. The digital version's free, though. So let's look. Where are we? We're back here at the IB. Remember, we had the IB continuation trade. This is not a recommendation. There's stops above us. So I have no trade here now. Because why? There's buy stops. So no trade. Anyway, please give that like. This stream is available exclusively to Bookmap Discord TraderLab participants as well as the TraderLab community. There's no cost for it, but you do have to confirm your Discord email to confirm you're not spam. Thanks again, guys. And I am going to post that holiday video again that one of our members created. It's really neat. And don't forget, the TraderLab community is here for you to help you develop the business of trading. Thanks again. Don't forget the thumb up. Thanks today and every day for visiting the TraderLab. Look forward to seeing you tomorrow. And trade safe. And don't gamble. Please. It's the way, maybe the only way you can sustain yourself in this business is only trading when you have a statistical edge. Leave the gambling to the gamblers. Sit on the house side of the table. Thanks.